Palantir recently reported quarterly financial results, and surprisingly, the stock price fell following spectacular figures. And I think that just goes to show how expensive Palantir stock had gotten ahead of the company's quarterly financial release. But these numbers were incredible. In fact, I made a big change to my valuation for Palantir stock following these earnings results, and my revisions were upward, not downward, for Palantir stock. So I'm going to share with you some details of the latest developments and how the company improved and what big change I made to my Palantir stock valuation and the impact to my fair value calculation for Palantir stock.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its most recently completed quarter, Palantir's management team highlighted that revenue grew 63% year over year and 18% from the previous quarter. They outperformed across the board, driven by strong execution in the US, which accounted for 3/4 of our business in Q3 and increased 77% year over year and 20% sequentially. Importantly, the business outside the US is struggling, but inside the US, Palantir is gaining traction among enterprises, and that's what's fueling expansion. Palantir had always had great success with government institutions in the United States and its allies, but what's been driving the success more recently is its expansion into enterprises, and that's really broadening out the customer base and increasing the company's growth trajectory. And they allude to this fact. They say their US commercial business grew at an incredible 121% year over year and 29% from the previous quarter, driven by insatiable demand and the quantified exceptionalism compelling customers to scale AIP across their operations. Palantir offers great value to enterprises. They love the return on investment. The challenging part for Palantir is making its services affordable to more enterprises. That's one of the primary reasons it was so successful with government institutions, is because governments have larger budgets and they can allocate those budgets without all the constraints that enterprises face. But enterprises, they are not as many of them can afford Palantir's services. Even if they agree that Palantir offers a great value, if Palantir is charging them $1 million and they're only generating $100,000 a year in sales, that business cannot afford Palantir's services. But what Palantir is doing a great job of lately is demonstrating to enterprises the value it adds, and therefore broadening the customer base by showing the customers what Palantir can do from them. And then as enterprises, as entrepreneurs and managers and owners feel more confident about the value that Palantir can deliver, they can then feel more comfortable expanding their budgets towards Palantir services. So they'll maybe allocate more of their budget to Palantir, whereas previously they wouldn't allocate the budget to this kind of service. Or if they don't have the money, they might go out and borrow money in order to purchase Palantir services, or they might come to some sort of arrangement with Palantir and tell them, we'll buy your services if you let us pay you back in 18 months instead of paying you back in 3 months, or whatever your previous terms might have been. In the quarter, they closed their highest total contract value ever at $2.8 billion in new contracts signed. Underlying this performance, they closed a staggering 204 deals worth $1 million or more. 91 of those were worth $5 million or more, and 53 were worth $10 million or more. As I highlighted, their services are extremely expensive. They closed 204 deals worth $1 million or more. In their U.S. commercial business, which now accounts for over 34% of their revenue, they closed $1.3 billion in total contract value. That's almost 50% of the total they closed in the quarter, highlighting just how much they've progressed in their business operations, expanding to a business that serves other businesses in addition to serving government institutions. This is their fastest growing area, with more than 6x year-over-year growth on a dollar-weighted duration basis. So their commercial business is expanding and expanding rapidly, and that's really what has me most excited about Palantir stock. This also makes Palantir stock a less risky business because previously it was only dealing with government institutions, and that concentration of customers makes the business riskier because as the United States government, as you're seeing right now, as they're cutting spending, other contractors and consultants are seeing their revenue decrease because the US government is spending less and trying to cut costs. And so when your customer concentration is high and you have a relatively few customers, that increases the risk of the business. And so when you expand your customer base, growing from a concentrated business to a more broadly based business, it lowers the risk. Now, of course, there is the offset that government business is more recurring and non-cyclical, meaning the US government, they decide to increase and or cut spending not based on what's going on in GDP or what's going on with unemployment, right? They don't look at macroeconomic factors. In fact, the government spending is sometimes counter-cyclical, meaning when the economy is doing poorly, that's when the government spends the most money because they're trying to offset that deteriorating macroeconomy and trying to support the economy with increasing spending so that can facilitate a return to growth for the economy. It's also one of the best times the government can spend money to facilitate growth is when the economy is performing the worst, because during those moments you have a larger number of individuals that are unemployed, and so you can increase growth without increasing inflation, because as the government spends money, it's bringing in people off of the sidelines, and that's creating more employment and creating growth. Whereas when a government spends money when unemployment is extremely low, that has the impact of increasing inflation rapidly, because where is the government going to find those incremental employees when unemployment is already extremely low? So it's going to take those employees from other opportunities and it has to pay them more, or those businesses that are seeing their people leave to other jobs as a result of increasing government spending might increase the pay they have to pay to retain workers. And so that creates more of an inflationary spiral. Overall, Palantir has done a great job, and its success has lowered the riskiness, and that's the primary change I made to my valuation. So my intrinsic value per share I updated today for Palantir stock increased by 40%. I previously had this business rated at $70 per share. I'm sorry, $50 per share, and I increased that today to $70 per share. Now, the stock is still overvalued, in my opinion, trading at a market price of $194 compared to my intrinsic value calculation of $70. But the company's making great progress. And the reason why the intrinsic value per share increased is because the company's beta was significantly higher before. It's closer to 3. And what I did is I adjusted the beta downward. I multiplied the company's beta by 0.8, which reduces it by 20%, because the company's recent progress suggests that it's a better business, a less risky business than its beta might suggest. Remember, beta is a backward-looking indicator. It measures the price movement of a stock compared to the movement of the S&P 500 index. And so if a stock price is more volatile compared to the S&P 500 index, the beta will be higher. Okay, but that's a backward-looking indicator. And typically, a stock price is more volatile based on the company's performance on revenue and cash flow and earnings per share. But what Palantir has demonstrated recently should reduce the company's volatility in revenue, in cash flow, in profit. Furthermore, they've significantly improved the balance sheet with over $5 billion in cash in the balance sheet and zero debt, which again reduces the riskiness of the business. And I don't think that was reflected in the previously more elevated beta, which if I return the beta to, if I eliminate that, you'll see the actual beta is 2.63, but I'm multiplying it, and that's what creates the $49 valuation. But when I multiply it by 0.8, it reduces, well, that I multiplied it by 8, not 0.8. But when I multiply it by 0.8, it reduces the beta to 2.104, which has the impact of increasing the share price to $70 per share. So that's the big change I made to my Palantir stock price, my Palantir intrinsic value calculation. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.